Why did it crash to $25,000? I lost everything. It's all their fault. It's Elon, it's SpaceX. Oh, hey. Yeah, tough day in crypto land today. Not looking good. Not good news going on right now. Yeah, if you're new here, please hit the subscribe button, the like button, leave me a comment below. Welcome back to the Sovereign Ratio. Today I want to take a look at what happened with Bitcoin in the last 24 hours and why you should not use the news as a reason to place blame for making a bad trade or a bad decision, which really is just a learning lesson in the end, right? We'll also take a look at TA and price action right now and what to maybe reasonably expect going forward as Bitcoin has made a decision to move to the downside. I had outlined in my previous video 2 directions that Bitcoin could go and targets for each one. And it looks like it chose the downside and did hit the $26,000 target that I was looking at, and even wicked below that due to a very big cascade of liquidations across multiple exchanges to the tune of like $500 million on Bitcoin. So I want to start off by talking about open interest first and foremost. Looking at coinalyze.net on the Bitcoin chart, we can see that there was an increasing amount of open interest in the market. For a long time, open interest has been between $10 and $11 billion, at least all the way back to August 8th of this year. But right here, you can see an increase in open interest up to almost $11 billion with a decrease in Bitcoin valuation, telling me that there are a lot of shorts being opened, right? And on top of that, there is not very much spot volume at all at the same time because things have been so boring and been grinding sideways for so long. Key takeaway, increasing open interest, decreasing price, low volume, looking for a crash. Not to mention the BBWP was extremely contracted. And when that happens, generally, as we know, when the BBWP expands, the price follows the direction of the stochastic oscillator, which in this case was pointed to the downside. Immediately, people started to look for a reason as to why they lost money or why the price of Bitcoin tumbled or whatever. The fact of the matter is there's a lot of news that came out that SpaceX sold all of its Bitcoin holdings, and that's true. But the fact is that SpaceX has been selling its Bitcoin holdings for quite a while. It didn't just randomly sell everything that it had. It's been doing this over the course of time. So you see this news article and you're like, oh, I can easily say why Bitcoin fell is because SpaceX just screwed everybody over and sold all their Bitcoin. It's not the case. They've been doing it for a long time now. And it's really easy to take a failure or something bad happening in the market and shifting blame from not trading correctly or maybe making a mistake or not looking at TA and just saying, oh, it's SpaceX's fault. This is not a healthy way to trade, and this is not a healthy way to even think in general. The fact of the matter is that Bitcoin has shown a lot of bearish signs for a long time now. We've had 2 massive run-ups in the market, taking price from 15.7 all the way up to 31.6. And even just taking all the indicators off the chart, it's very easy to see that there have been 2 big run-ups with a lot of separation between the trend line and the price. Here was the first one. Here was the second one, which had a lot of distance between that trend line and the price. And then the third one, it just barely eclipsed the previous high, which would tell me that Bitcoin's running out of steam. And the distance between the trend line and price is a little bit shorter. And we're just approaching the support line here. There's low volume, open interest is high. And even on top of that, when we put the indicators back on, there are 2 drives of bearish divergence on the RSI. You have the stochastic, which was showing an overbought signal up here in this area, and BBWP was fully contracted on multiple time frames, which generally, like I said, follows the direction of the stochastic oscillator. At the time, the stochastic oscillator was pointing to the downside, and price went to the downside. Running a Fibonacci from the bottom of this movement back here at the bottom of the market all the way to the 31.6 level, you can see that the Fibonacci here at 382 was around 25.6, and that's a pretty good average of where Bitcoin stopped during this liquidation cascade. It also matches up well with this news here of when BlackRock filed for a spot ETF, as well as this previous resistance here and this previous resistance here, making this a very important level to hold, especially because if it were to break below this point here where BlackRock filed for the spot ETF, that would signal basically a bearish reversal in the market. Right now, there's potential that Bitcoin could come down to this area around 24.8, and then there's a new range established. Right now, that range would look something like this, in my opinion. The line there, and then potentially a line somewhere in this area I could see Bitcoin ranging in the 25.2 to 28.6 area for quite a while. And if it does come up to that 28.6 area, or maybe even a little higher to retest this previous support and resistance line, maybe up to like 28.8 or something. If you have any Bitcoin right now, I think that would be a good time to let go of it and wait to see what happens from there. Because it's very possible that if you've lost money on this move, there is a potential range forming here, right? As long as Bitcoin holds 25.2, somewhere in that area, you could potentially just ping pong around here for a while until Bitcoin makes another decision. However, if Bitcoin does make another move to the downside, it could be very bad, with targets probably in the 20 to 21 area where there's a tremendous amount of liquidity sitting, at least for now, unless the orders were rug pulled or something like that. Bringing the Fibonacci back up, the same golden pocket on that movement between the 6.5 and the 6.18 is between 21.1 and 21.6. So I think 21,000 is a major point of interest, and also 20,000 because it is the bottom of this move here, and it's a big even number that people are going to relate to, like 20,000 Bitcoin, 25,000 Bitcoin, 30,000 Bitcoin. People like big even numbers. So somewhere in that 20,000 to 21,000 area is a big area of interest. On a reverse Fibonacci, just from the top here at 31.6 to the current low that we made yesterday, you can see that on the reverse Fib, there is an area of interest here at 28.582 that lines up extremely well both with the bull market support band and also where these wicks here that were previously support. So 28.5, 28.6 could be the top of that potential tradable channel that we just looked at. As mentioned in a previous video, the hash ribbons indicator did just flash a buy signal for the first time since January of this year. And almost every iteration of that hash ribbons indicator means that price never revisits a low lower than the previous one, right? So back here, that 15.7 area, according to the hash ribbons indicator, there's about an 87% probability, because there have been 2 failures, that price will never go below that again. There was the flu dump back in 2020, and then there was one other instance where this did not pan out. But generally, the hash ribbons indicator shows a big shift in sentiment and direction in the market, and usually can show when the start of a next bull run is coming. That doesn't necessarily seem to be the case here, and it could fail and be the third failure. I don't know, but that is also flashing, and previous instances lead us to believe that price won't go below the previous low. I want to make one final note about market psychology and why, even though it was not the correct decision, I don't blame you for buying in this area, because that was one of the biggest pieces of crypto news that's ever happened, with XRP being deemed not a security and that wick up there to 31.6 followed by the red candle retracing all the way back. I don't blame you for buying that, because that is a potential big news event that could send price to a crazy direction to 45K, 50K, or whatever. But the fact of the matter is those things are designed systematically to destroy your psychology, right? Because let's look at the chart for a second, right? You're looking at this barely trying to eclipse the previous high. You got that. You've got 2 drives of bearish divergence. You've got oversold on the stochastic RSI. You've got contracted BBWP. You have all these bearish signals. And then what happens? This super bullish news comes out, right? Like, oh, XRP not a security. And everybody's like, oh, Bitcoin's going to the moon, crypto's going to the moon. When your heart tells you that that's what's going to happen, and your brain tells you that's what's going to happen, and you start really feeling that way, like crypto's just going to start rocketing, that's when you need to be scared to death. Because that's when major shifts in the direction of the market happen, and we get things like we have today. I'm still not even fully trained in this. I get stuck up in it too. But whenever you feel hyper bullish, that's when you need to be the most scared. So again, I would highly recommend learning TA and stop trying to blame the news for things that happen, and make the best decisions you can off the chart. The news can be helpful sometimes, when it comes to things like FTX or even just general economic news, can have a major impact on the market, right? But TA also tells the story of that news, so you don't even need to know what the news is. There's a saying, show me the chart and I'll tell you the news. Maybe you don't know what the news is, but you can see news happened here. And this giant red candle and the subsequent red candles are very much proof of that. If you're new here, please hit the subscribe button, the like button, leave me a comment below. I appreciate all of you, and I look forward to continue making videos, continuing to grow the community. Thanks for coming by, and safe trading.